Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we are looking at Ramaco Resources.
If you find our talks useful, please consider subscribing, like, and comment underneath.
Would really appreciate it.
So I have to say, looking at the stack of material you sent over, I had to double check my calendar.
Oh, yeah.
I mean, I've got filings, I've got this really aggressive short seller report, analyst notes, and they're all about a coal miner.
It does feel a little strange, doesn't it?
It feels like we traveled back in time. It's Monday, January 26th, 2026. All the headlines are screaming about AI, quantum.
Yeah.
And here we are talking about Ramaco Resources.
A company that digs black rocks out of the ground.
Exactly. So, why are we doing this? Did we lose a bet?
We did not lose a bet. In fact, if you look at the chart, the only people losing bets are the ones shorting this company.
Okay, that's a fair point. I did pull the chart. The stock's up 127% over the last year.
And what, up 27% in just the last month?
Which is insane. That does not look like a dying industry chart. That looks like a rocket ship. So clearly my reflex to just dismiss coal is missing something huge. What is the disconnect here?
Well, it's not that coal is cool again. It's that most people don't really understand that not all coal is created equal.
Right.
When you hear coal, you probably picture what, a power plant billowing smoke. Thermal coal.
Exactly. Burning stuff to keep the lights on.
Ramaco isn't in that business. They mine metallurgical coal, or met coal. This stuff isn't for electricity. It's a key ingredient you need to make steel.
Okay, so they're tied to infrastructure, not the power grid.
Correct. But here's the hook. This is why I sent you everything. The met coal business. That's just the cash engine. It's the boring part. The reason this stock is up 127% is because they are effectively pulling a magic trick. They are using this dirty, old-world coal business to fund a pivot into one of the most futuristic sectors there is.
Yeah.
Rare earth elements.
Rare earths. So we're talking about the stuff you need for fighter jets, EV motors,
Right.
all that.
Exactly. They're transitioning from, a simple resource company to a technology materials play, taking cash from the 19th century economy and pouring it straight into the 21st century supply chain.
Okay, that is a fascinating story. It's like using a payphone business to fund a quantum computing startup.
That's a surprisingly good analogy, actually.
But narratives can be expensive. Let's look at the numbers here, because I'm looking at the fundamentals you highlighted. The trailing 12-month revenue is $579.5 million.
Right.
Which sounds like a lot, but it's actually down almost 4% from 2024.
It is down, yeah.
And the bottom line looks even worse. They swung from an $11 million profit to a net loss of about $33 million. So help me square this. Revenue is dipping, they're losing money. Usually Wall Street hates that. Why is the stock screaming higher?
Because the market is a forward-looking machine, right? It doesn't care about the $33 million you lost yesterday. It cares about the cash you're going to generate tomorrow.
And the forecast is good.
It's incredibly bullish. Analysts are projecting 16% annual revenue growth over the next 3 years. That's beating the industry average. But the real story is why they posted that loss.
Is it mismanagement or investment?
It's investment. That loss is largely money being poured directly into the pivot, into developing those rare earth assets. But here's the safety net, and this is crucial.
Okay.
The core business, the met coal, is facing a massive pricing tailwind.
Right. I saw the notes from Jefferies on this. They were forecasting something like $198 a ton.
198 was the conservative estimate, but look at where the futures market is right now.
It's sitting at, wow, $245 a ton.
That is a nearly $50 difference per ton. In this business, once you cover your fixed costs, that extra $50 is almost pure profit.
So the market just shrugs off the loss.
It does. It says, we aren't worried, because the core business is just printing way more cash than anyone expected.
The loss is strategic, not structural. They're spending money because they're building something, not because the business is failing.
Precisely.
Okay, let's talk about what they're building. The crown jewel in these reports is the Brook Mine in Wyoming. Why is a mine in Wyoming being valued like a tech company?
This gets us to the whole idea of a moat. Brook Mine isn't just another coal pit. They found that the coal seams there are rich in rare earth elements. And the key word here is domestic.
Right, because right now, China controls what is it, like 90% of the processing market?
It's an overwhelming dominance, and with all the geopolitical tension, the U.S. government is frankly desperate for a domestic supply chain. You can't rely on a strategic rival for the minerals that go into your fighter jets.
So Ramaco is just sitting there waving their hand saying, hey, we found some in America's backyard.
That changes the math completely. If they were just a coal miner, they'd trade at a valuation of maybe 5 or 6 times earnings. Standard stuff.
Boring.
Boring, dirty, cyclical. But Ramaco is trading closer to a 9.0x forecast multiple. That's a huge premium. The market is pricing them like a defense contractor or a critical tech supplier.
A national security premium.
It is. And it's backed by real political clout. Did you see the CEO's recent appointment?
I did, to the National Coal Council. It sounds important, but does it actually matter?
In a heavily regulated industry.
Oh,
It matters. It means they have a seat at the table when energy policy is being written. It signals the government sees Ramaco as a partner in national security, not just a problem to regulate.
that's a hard moat to cross for a competitor.
Very hard.
Okay, I get the vision, domestic supply, government backing. But let's go back to the money. This kind of pivot is expensive. You need capital.
You do.
And I'm looking at their balance sheet. They raised about $290.9 million with these convertible senior notes due in 2031. But the detail that just stopped me was the interest rate.
Let me guess.
0%. Zero in this economy. Who lends nearly $300 million for free? What's the catch?
That's the beauty of the convertible note. The lenders here, they aren't looking for a safe 5% yield. They're making a bet. By taking 0% interest, they're basically buying an option. They get the right to convert that debt into Ramaco stock in 2031 at a set price. They are betting that the stock will be so high by then, because of the rare earths, that the equity they get will be worth way more than any interest payments.
So it's a trade. Ramaco gets free money now to build the mine.
Right.
And the lenders get a lottery ticket on the company's future success.
Exactly. And for Ramaco, it's brilliant. They get almost $300 million of liquidity to develop Brook Mine, and it doesn't cost them a single dollar in interest payments for 5 years.
That's incredibly smart. It gives them a huge runway.
And they're so confident in their cash flow that they're also buying back their own stock. They announced a $100 million share repurchase program late last year.
And I saw the stock popped, what, like 10% on that news alone?
Right, because it's a huge signal that management thinks the stock is undervalued.
Yeah.
Plus, look at their current ratio. It's 2.97.
Which means
For every dollar of bills due in the next year, they have almost $3 in liquid assets ready to go. They're financially bulletproof in the short term.
okay, so the cash is there, the plan's there, and the smart money seems to agree. Jefferies upgraded them to a buy with a $30 price target.
And that's actually on the conservative side. The consensus among analysts is a strong buy. Price targets go from $38 all the way up to $63.
Wait, 63? That's a 50% upside from here.
It implies huge upside. If they execute, the stock is cheap right now.
If they execute. That's the phrase that always gets me. You know my job here is to be the paranoid one. It can't all be sunshine and 0% loans. Let's talk about the bear case.
To shed.
I'm looking at this report from Wolfpack Research. This wasn't a mild critique. They came out with some pretty damning allegations about the Brook Mine.
They called it a hoax.
A hoax, that's
Yeah.
a strong word. What exactly was the accusation?
Wolfpack basically claimed that the geological data Ramaco was presenting was inflated. They argued that concentrations of rare earths were too low to ever be commercially viable. They were saying, this isn't a tech mine, it's just a rock quarry with a great PR team.
Ouch. And the market reacted to that.
Violently. The stock dropped almost 10% instantly when that report came out. And it triggered a wave of lawsuits from firms investigating for securities fraud.
So is that still hanging over them?
Well, Ramaco has fiercely denied it, and independent testing so far has mostly supported the company. But it highlights the big risk here. The stock price is incredibly sensitive to the rare earth story. If that story cracks, that premium, it just evaporates.
And the stock collapses.
You go right back to being a boring 5x coal miner. The valuation is pinned to a promise.
And even if the rare earths are real, there's still the commodity risk, right?
That's the other shoe that could drop. We talked about how high met coal prices are funding this whole thing. But met coal is cyclical. If global steel demand crashes, say, a recession hits, the price of met coal drops.
And the funding engine stalls out.
Right. They're still posting a net loss even with these great prices. If prices tank, they might have to burn through that cash just to survive, not to build the new mine. It is a race against time.
Get the rare earth working before the coal cycle turns against them.
That's the multi-million-dollar gamble.
Okay, so for someone listening who's interested but cautious, what are we watching for? What's on the catalyst calendar for the next year?
3 things. First, hard data from Brook Mine. We're in that 2026 to 2028 commercialization window. Look for offtake agreements.
Define that.
An offtake agreement is when a customer, say a defense contractor, signs a contract to buy the minerals before they're even mined. If Ramaco announces one of those, it proves the product is real.
And the stock flies. Got it. What's number 2?
Macro politics. Watch the U.S.-China trade headlines. If China restricts exports on rare earths again, Ramaco's domestic supply becomes infinitely more valuable overnight.
A geopolitical hedge. Yeah. And number 3?
Just the technicals. Watch for a breakout toward 52-week highs. If the stock can push through that resistance, it signals the market has fully digested this short report and is ready to believe again.
So, putting it all together, the coal cash flow, the rare earth lottery ticket, the skepticism, the government backing, what's your final verdict?
I'm giving this an 8 out of 10.
An 8. That's pretty high given the risks.
It is, but here's the thesis. It's
Yep.
a buy based on the dual asset exposure.
Yeah.
Think of it this way. At the current price, you're paying a fair price for a well-run met coal business with a great balance sheet.
Okay.
And you are getting the entire rare earth prospect, basically a tech startup with massive potential for free.
Yeah.
You buy the coal, you get the optionality on the future for nothing.
That's a compelling way to frame it. Even if the rare earths are a bust, you still own a profitable miner. But if they hit,
If they hit, it's a multi-bagger.
well, it is certainly not what I expected when I saw coal on the docket today. It really makes you check your assumptions. I mean, we live in a world obsessed with the clean future AI, EVs.
Right.
But you can't have any of that without these critical minerals.
And you can't get the minerals without digging holes in the ground.
Exactly. In a weird twist, maybe the most strategic tech investment in 2026 really is a coal miner in Wyoming. Does that change how you view dirty energy? It's definitely something to chew on.
It certainly is.
Thanks for joining us.
Catch you on the next one.